Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is Countdown to the Close. We have but 60 minutes left in your training session. Caroline Hyde, Romain Bostick, Taylor Riggs. Joined now by our colleagues, Carol Massa and Scarlett Fu.
Whoa, look at that.
We're pulling her in.
I'm glad I gave you the keys back, Scarlett.
Yeah, yes. Nabbing you from Quick Take for a moment because we go to TV, radio, and YouTube to really digest what is another extraordinary day on the markets. We feel whipsawed, we see volatility, but at least today, for once, Carol, it's to the upside.
Yeah, across the board, right? When you look at those major equity averages, Caroline. But I've been looking at the NASDAQ Biotechnology Index because that index is up more than 4%. Really, that news out of Biogen lighting a fire under the entire sector. Of course, Biogen having very good results after a key clinical trial showing its therapy slowed the progression of Alzheimer's. Biogen alone adding some $10 billion in market value. But if I look at this index, over 300 names are higher today, only a few lower and a few unchanged. So it feels like, Scarlett, they're all in when it comes to biotech.
I'm keeping a close eye on the 10-year yield because it rose above 4% ever so briefly, and it was clearly strong resistance today. And in fact, we just spoke with Bloomberg Intelligence, and they reminded us that it was strong resistance back in 2008, 2009 as well. So this is the first time it rose to that level in more than a decade. But then, of course, it came right back down, and from an intraday high to an intraday low, it moved about 29 basis points. Pretty incredible, the velocity at which it came right back down. I feel like this intervention from abroad to stop the selling in the 10-year really means that the losses over the past week are more about investors pricing in this idea that it'll be a global recession that central banks somehow can't avoid hiking us into.
Yeah, I mean, you even heard, of course, Raphael Bostic voicing the concern about what one UK recession can mean for the rest of the world overall. And we just want to look at what's happening in terms of your impact flowing really across the Atlantic as the moon music turns. S&P 500 drives up 1.8%. We're up 65 points. The Dow up 507 points. That's 1.7% higher. The Nasdaq basically in line. We're up 1.8%. That's 192. The Russell 2000 really a star performer today, up more than 3 percentage points, 51 points to the good. Taylor.
And if I have to say so myself, a broad-based rally. Take a look at the IMAP function on the individual sectors.
I mean, that's not really an opinion. I mean, that's
if
fact.
You must say so
right.
yourself.
Okay, well, I have bones to pick with you because when I call
this is
a
like the third
broad-based
bone
rally,
you picked with me.
you tell me that there's
Sounds
no
like
breadth
business
and
as
depth
usual.
in this market. Scarlett, welcome to the cat fight that we do every day at 3 p.m.
This is what happens.
Romain, every sector has a 90% of at least all of those stocks in the green. So any sector you look at least 90% of those individual stocks are in the green.
Yeah.
Should we say broad-based or no?
Well, I say volatility. I mean, we had a 90% down day 2 days ago, and now we have a 90% up day. Only 11 stocks in the S&P 500 are in the red, and unfortunately, one of those is Apple. Of course, the big scoop by Bloomberg News on, a scale back in some of the production expectations, if you will. Kind of just takes Apple back to some of the baseline projections that it had given before, but kind of spooking some folks. We should remember that every iPhone cycle, there's always sort of this speculation about how much they'll produce and whether those factories over in China are up to speed or not. Keep an eye on that space. Those shares down about 1.7%. The macro and the fundamentals still important. UiPath down almost 6% here on the day after giving a forecast that disappointed investors. And then, of course, we have our eye on biotech, as Carol was just talking about. Biogen up 39% here on the day. Lilly and some of the other names also moving higher as well. And then, of course, we have our eye on Hurricane Ian and the potential fallout there. Of course, a lot of people in the market are trying to find opportunity in certain stocks, including Home Depot and Floor & Decor. Floor & Decor, which has a huge presence down in the southeast, up about 6.5% today.
Ian about to make landfall in the southwestern Florida, we understand, according to NHC. Meanwhile, look at the whipsaw. When we talk about really stock market volatility, it pales into insignificance when you look at bond market volatility at the moment. And the 30-year yield, just seeing this record drop that happened in the UK, and that meant a full 100 basis point move over the last couple of trading days. How, as you said, Romain, you can ever see a floor to stocks when we see just such movements on an intraday basis to bonds?
The volatility is insane. And people have been pointing, everyone wants to focus on the VIX, but when you look at the MOVE index, when you look at Treasury market liquidity, when you look at a lot of the metrics that are underpinning the bond market, and you see just how unstable it is right now, it makes it hard to call that bottom in equities.
Well, I'm glad you guys keep saying volatility because it's something that Mohammed El-Arian talked about with John Farrow on Bloomberg TV earlier. He's, of course, Bloomberg opinion columnist. He talked about UK government's big gamble in announcing those unfunded tax cuts. And he says the BOE is now in a bind because of fallout from them. And he says it's ripping through asset prices. And he says it does add another layer of volatility for investors. Here's what he had to say.
we have to buckle our seatbelt even tighter. And we have to recognize that policymakers are no longer repressors of volatility, but they contribute to volatility. And that this journey is going to be incredibly bumpy.
Yeah, bumpy to say the least. It's like a really bad roller coaster ride. Of course, that's Mohammed El-Arian, but that's the one thing I feel like I say it over and over again, Scarlett. We can count on the volatility. Romaine talked about it earlier, too.
We can count on the volatility because you've got a politician now giving direction to markets. Kwasi Kwarteng, the Chancellor of the Exchequer, met with some investment bank CEOs, and he was told that he needs to give more details about the tax cuts and their stimulus plans to soothe the market. But how do you craft a message that doesn't deny the fact that the government and central bank are working at cross purposes?
Well, they are working at cross purposes. I mean, this was another own goal in a long list of own goals over in the UK. I mean, the only good thing you guys got going over there, Caroline, is that plastic money, which is impossible to rip. But you sort of wonder what that meeting was like.
A few other things
when all of those bankers got into that
Caroline,
room
don't take
with
that.
Kwarteng. And I mean, just the idea that he would sort of say to them, oh, don't short sterling, don't short gilt. What else are they going to do?
Yeah.
Can we get Chris Benode on the phone? What's he up to?
Well, yeah, the guy who was relatively pro-Brexit and then has been shorting the pound. But
It's up
I mean, he says
140%
that,
this
yeah,
year. You gotta love the chutzpah there.
make money. It might not be his political.
Yeah.
You can't invest on politics, Romaine. But it does seem overall that this hurts. What time and time again?
politics is investing
we
in
like
you.
to talk here about, of course, the markets, about
Scarlett, this is what
implications.
happens.
Yeah, no, this
Go
is
ahead,
following.
Caroline.
Scarlett, can you talk?
Well, what
please?
Scarlett really does
Yeah.
nowadays is talk to the actual people
Where
who
is-
matter, the consumer. And at the moment, the consumer hurts your mortgage rate. I'm afraid they
Yeah.
didn't affect the 2-year,
Killer.
Scarlett. They affected the 10-year yield, but the 2-year still remains very high, and that's what dictates your mortgage price.
Yeah, and it's got everyone worried in terms of what happens next because we know the high mortgage rates have already put a damper on home sales. We saw this week that home prices, that is, fell for the first time in a decade. What more is there to come when you balance that against the fact that there is still a chronic shortage of housing, of inventory out there? So it's put us in this very tricky situation and leads people to wonder, how can you not fall into a hard landing when it comes to the economy and how the Fed guides us there?
Yeah, meantime, Charlie Evans speaking over in London at the Chicago Fed. Inflation much too high in the U.S. Did we not know that?
Oh, okay.
He's in the UK too.
Going out on a limb.
He's in the UK. See, it all is a nice
I want to know what he
circle.
said about the UK.
All right, all right.
That
well,
it's cheap right now, I probably.
probably. All right, guys, we're going to continue our cross-platform coverage.
Scarlett coming back later?
Yes, we're never letting her go. I'm locking the door. She can never
One more
leave.
hour.
Well, 2 more hours.
Oh, that's right, radio, 2 more hours.
We'll come back on,
Home early.
on radio, TV, and YouTube. We're not letting her go. Beyond the bell, we'll be back to count you down to the close on this Yes, It's Wednesday.
You're listening to Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
Yes, indeed, everybody. Bloomberg Business Week live in our Bloomberg Interactive Broker Studio, streaming on YouTube. Tim Stenovic on assignment on this Wednesday. So lucky for us, Scarlett Fu of Quick Take, of TV, of radio. She does it all here in our Interactive Broker Studio. I do think it's kind of funny, and forgive me, I grew up on sarcasm, large family, but when you do see Chicago Fed head Charlie Evans in an event in London, some of the headlines coming out, there's clear support to keep raising rates. Check, got that. Inflation is much too high in the U.S. Yep, got that as well. But he also, was it in a conversation with CNBC, was it yesterday, talked about maybe the Fed topping out in March of 2023 when it comes to rates, that maybe that's peak. So I thought that was an interesting door that he said, I think it was yesterday.
But he's just one of many voices, right? I
Very
mean, there's
true.
a lot of Fed speak this week and
Yes.
today, and everyone's going to be tearing it apart, really diving into it to hear what comments there are. But the bottom line is nobody knows what's going to happen.
Yep.
And the Fed is doing what it can with the information it has on hand, but we're all working with the same information.
And I think as long as that inflation number continues to be hot, right, and doesn't come down
8.3%
significantly,
year on year.
that's a lot. You know that the Fed is going to do everything it can. Even if we know Fed policy lags, they're going to wait until they start to see significant moves to the downside,
Yeah.
right? All right, folks, you are listening to Bloomberg Business Week, watching us on YouTube. Carol Masser along with Scarlett Fu. And I just want to point out the equity market's taken another leg up in the last few minutes. So we are now up 2% on the S&P.
Session highs.
Up to, yeah, look at that, up 2% across the board. Maybe that was short covering. Who knows what's going on? All right, right now, back to World of National News, back to D.C. and Nancy Lyons. Hey, Nance.
Hey, Carol. The latest bulletin from the National Hurricane Center says Ian is now packing winds of 155 miles an hour and is about 20 miles west of Fort Myers. Already, it's causing catastrophic storm surge and flooding. The winds have actually been sucking the water out of Tampa Bay, exposing the seafloor. Florida Power and Light is standing by to deal with the expected outages. The utility's Armando Fernandez says they should be able to react and repair quickly.
We expect widespread damage and outages, but the improvements we have made to strengthen the grid since the historic 2004-2005 hurricane season will enable us to restore faster.
Hernandez says they have thousands positioned throughout the state. The Edison Electric Institute estimates there are more than 30,000 utility workers on hand from 26 states. The European Union is proposing a new set of sanctions on Russia, including a price cap on crude sold to third world countries. That's after the Kremlin announced a partial mobilization in Ukraine and staged widely condemned annexation votes in regions it's occupying. European Commission President Ursula von der Leyen says Russia is making an illegal land grab.
We do not accept the sham referendum and any kind of annexation in Ukraine. And we're determined to make the Kremlin pay for this further escalation.
EC President von der Leyen. Europe is also weighing its response to gas leaks from the Nord Stream pipeline after a series of explosions. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. Nancy Lyons in her 99.1 newsroom in Washington, D.C. So you survived your first simulcast. Do you feel okay?
Yeah, I feel pretty good.
You did great. It's
There are a lot of voices, but I figured it out.
It's a lot of voices, but we love playing around with our TV colleagues. Hey, you flagged this story, shared it with our team. Has to do with Amazon's newest Kindle e-reader.
Yeah, this is interesting because they're going to update their Kindle to make it so that you can take notes with a pen, and obviously a stylus. And this is going to be called the Kindle Scribe. It will ship later this year at a price of $339. I could see the use case for it, but I'm more surprised by the price point and the fact that they're going to do this in what will likely be a recession.
Yeah, that's interesting to see if people are be like, well, why do I need this? You know, when I see something like this, because I think about, you know, my daughter in college, and I remember buying and spending hundreds of dollars
on textbooks.
Yeah, and they don't do that anymore.
No, they rent it if they do that.
Exactly. And so it's kind of interesting to see, like, I think this would be a really useful thing in terms of schools specifically, where they can just, you know, take some notes as they read through on something on an electronic device.
I mean, you and I are kind of old school in that we, you know, remember actual physical textbooks, and I feel like you just can't remember anything that you read online. It just becomes all
I agree.
that I read online is like some form of celebrity gossip, so I feel like it just gets put into that corner for my mind.
Well, look at me. I'm like surrounded by paper. Hey, I do want to mention a headline crossing. This is important stuff, and we've been tracking it. And speaking of tracking, Hurricane Ian making landfall in Florida as a Category 4 storm. I know earlier reports, I think there were some concerns that it was going to be Category 5. Category 4, though, is nothing to sneeze at.
No, Category 4 is still capable of causing a lot of damage, and we're keeping a very close eye on the insurance companies, of course, that have a lot at stake here, and not to mention, of course, people and making sure they get out of harm's way.
Yeah, exactly. And we've been talking about this being, I think, one of the most toughest storms to hit the United States. So something we'll continue to track and certainly update our Bloomberg audiences. All right, you are listening and watching Bloomberg Business Week. Carol Massar along with Scarlett Fu, and this is Bloomberg Radio.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
As we prepare to update you on the price action in markets today, I want to point out this hot headline from the Bloomberg terminal. Hurricane Ian has made landfall in Florida as a Category 4 storm. Let's get to the Bloomberg Macro Squawk now and check in with Bill Maloney. Hi, Bill.
And good afternoon, Doug. U.S. stocks with an aggressive bid today, helped by the Bank of England pledging unlimited purchases of long-dated bonds. Dow's now up 556 points. S&P's gained 74, while NASDAQ is higher by 2%. The U.S. 10-year yield plunged to 3.69%, was up over 4% earlier. Gold is up 33, energy is climbing, and Bitcoin is higher by 2.7%. Among the main 11 S&P sectors, all were in the green, led by gains in energy and telecom. And leaders to the upside in the Dow, Home Depot, Boeing, and Disney. Only Apple fell. After earnings, Paychex rose 3%. And in deal news, Billtrust to be acquired by EQT for $9.50 a share in cash. In other news, Fed's Evans says there is clear support to keep raising rates. And Stanley Druckenmiller sees a hard landing in 2023. Wrapping things up, Jefferies reports after the bell. Live from the First and Breaking News Desk, I'm Bill Maloney. Doug?
All right, Bill, thank you. And if you have a Bloomberg terminal and you want to get the live audio updates on it, the function is SQUA, then the green go key. I'm Doug Krisner, and that's your Bloomberg Business Flash.
All right, Doug, thank you so much. Doug giving us an overall trade on that rally, because we are certainly seeing stocks really across the board trade higher today in a significant way. Not participating as much, though, in that rally is shares of Apple. They were down as much as 4.6% at their lows today, still off those lows, but still down about 1.4%. And this has to do with a Bloomberg exclusive, a story about Apple backing off plans to increase production of its new iPhones this year. This is according to folks in the know. So let's get to it with our Bloomberg News West Coast correspondent Ed Ludlow. Normally on the West Coast, lucky for us, he's on the East Coast and he's here in our studio.
For a while too.
I know. He's another one I don't think we'll let go back. You're stuck, babe.
What a treat.
So what's going on here? What do we need to know?
And it's complicated and nuanced, but sources tell us that just before the iPhone 14 was announced, they went to suppliers and said, let's boost production by around 6 million units. We were thinking it would be 90 million this year for the iPhone, which was in line with last year. They requested that suppliers brace for an additional 6 million, and according to our reporting overnight, they walked that back. And the concern is that that great demand for this new handset that they thought would be there actually didn't materialize, and we've already had some evidence of that in the pre-order numbers too.
So when I look at Apple shares, they fell as much as 4.6%, but they've been steadily paring their losses.
Yeah.
And this doesn't sound like a good story for Apple, right? Less demand for its highest priced iPhones or for those super expensive high margin phones. Yet it's not as bad as you might think either.
So the sell side in particular is sanguine because most of them were modeling for 90 million units anyway. So they look at this report and they go, well, it hasn't really changed anything for us. It's still 90 million. There are some specific pieces of reporting that's so important that there's evidence that the consumer, particularly in China, is going for that higher end model, the 14 Pro. Okay, so while there might be concern about overall volume, they are selling the more expensive handset. And so if they stick to that original 90 million goal, which was modeled by the street, then maybe those higher ASPs can boost the top line, even if just a little.
Because they're selling more of the more expensive
Because they're more
model.
expensive.
What I thought was interesting, and I bet you picked up on this, our Bloomberg Intelligence team, Anurag Rana, reminding us, because this was about, or I guess the belief that there was, as you said, China demand, European demand weak, and he reminded us that those two regions are about 43% of Apple's total sales.
Exactly.
I mean, that's massive, right? So we need to think about macro stories here right now.
Yeah, this is the why do we care about this? And it's that rich people buy iPhones, and even in a recession, they still buy iPhones. What we're looking for is the kind of bigger picture effect. We know that the smartphone market is soft, particularly in China. The pre-order data report from Jefferies this Monday showed wasn't great in China, but good for the higher price models. We need some lens. We know what the Fed's doing. We know about the outlook for recessions around the world and inflation. What we do is we look to the company movement and action to try and get another kind of read on the consumer. And I think a lot of what this story did was say, things are pretty bad in key markets.
But still, they're going to sell a lot. I always feel like, I know when you temper back the Apple numbers, but they still kind of blow me away.
Yes.
Even the expectations, if it's a lower number, it's still a lot of stuff.
I like what Global Equities Research said. They called Apple the first casualty of recession and said that the collapsed demand for these iPhones is just the tip of the iceberg. You could see a lot of layoffs across and through the Apple supply chain in the months to come.
Yes, and take this as one part of a whole. The next piece of evidence we look to is Micron Earnings Thursday. Why? Biggest maker of memory chips, DRAM, also a huge supplier to Apple. If their earnings are soft, more evidence that the broader market for electronics slowing down.
The one thing that I'm also intrigued by, too, when it comes to Apple is that they have the ability to just call up their supplier and say, we want 6 million more. And then a couple days or months later say, you know what? No, scrap that. We're not doing that anymore. And the suppliers just say, have no choice but to say no.
You're not going to say no to
that's
Apple.
fine. Whatever we planned, all those people we're going to bring in, we're not bringing them in now.
Yeah, and the equity pain was felt in Asia for those suppliers, in Europe for ST Micro, and here in the United States, and they all scrambled. We heard from sources one supplier completely shifted production to just the Pro, the higher end. Well, what if that doesn't stick and people end up wanting the cheaper models?
Well, as we reach out to Apple and look for some commentary or some clarity on this, I mean, what is it, top of mind for you if you were sitting down with the CEO of Apple? What would you want to be asking them right now?
Yeah,
other than to confirm, hey, is this true?
An Apple spokesperson declined to comment for the story.
Surprise.
Apple is a company that's had tremendous growth, and what we're talking about here is flat unit growth. 90 million last year, 90 million this year. That's a lot of iPhones, but at the top line, I think that the consensus is for 2% revenue growth. That's not what Apple does. We've been through the pandemic era cycle. We've been through the 5G super cycle. What's going to lift them up into that next phase of growth? And there's a lot resting on people buying the expensive Pro handset.
And that's why there's a lot of questions about Tim Cook as well, because he's not the visionary that Steve Jobs was. He's an incrementalist, right? He makes the iPhones better, improves the guts, but maybe not the actual aesthetic of the phone that people get excited about.
So the iPhone 14 and the Pro had fancy camera features, very high spec, but what was the update? It was satellite-enabled capabilities. If you're stuck up a mountain or you're in the ocean, you can connect via your iPhone.
Very rich people.
Right,
there's a theme.
Who's that helping? Is that going to make me buy an iPhone 14?
Not hiking up,
it doesn't matter whether I buy one, but
I will say, I'm looking to upgrade my phone again, but I keep looking for something that's an incremental or bigger boost, a change.
And that better camera and the satellite capability doesn't do it for you?
Camera that does dishes, does laundry, like that kind of thing. No, but it's an important stock to watch, but I do think you guys are right. You pointed it out. It was down 4.6% at its lows. It's come off of that with the overall rally, but...
read Mark Gurman's stuff. He has all the details very early, so yeah.
Yeah. Does he have a bet?
Big scoop by Bloomberg News.
Does he have a bet at the company or something?
I don't know how he does
He has lots of friends at Apple.
Oh, my God. All right, folks. We got to run. Ed Ludlow, Bloomberg News West Coast correspondent. He is here on the East Coast for a bit, joining us here in our interactive broker studio. This is Bloomberg.
broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130 to Washington, D.C., Bloomberg 99.1 to Boston, Bloomberg 106.1 to San Francisco, Bloomberg 960 to the country, Sirius XM Channel 119, and around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, so we've talked Apple, check. We did that with Ed Ludlow. We've also got an interesting story on the Bloomberg by Ian King. It's all about Intel. And I feel like, Scarlett, when you want to know anything about the chip world, that's where you go.
He is the go-to authority on semiconductors. Ian King, with his decades of experience covering semiconductors, I always use that as part of my introduction to him.
I totally agree. All right, we're going to talk with Ian in just a moment. First up, though, let's talk with Doug Krisner with an update on the trade. And we're seeing some more buying here on the equity side.
Yeah, we are near best levels of the day here, Carol, with the S&P up about 2.2%. If you were short sovereign debt either in the UK or in the States at the beginning of today's session, you had to scramble to reverse that bet. After the BOE delivered a bit of a shock, it's now going to buy long-dated UK government bonds in whatever quantity is necessary. Yes, it's kind of a quantitative easing, right? The government has created some chaos, or did so in markets earlier, with plans to cut taxes. So the BOE essentially was left with no choice if it wanted to bring a little bit of calm to some of these debt markets. In the UK debt market, we had the yield on the 10-year gilt dropping 50 basis points today to 3.99. And in the States, yields now across the curve moving lower. At the long end, a 10-year Treasury that's down 23 basis points to 3.71. At the short end, the 2 years off nearly 20 basis points now at 4.08%. We've got a rally in crude oil right now with WTI in the electronic session higher by more than 4.5%. We're trading around 82.10. This has sent the S&P Energy Group on a tear. It's up nearly 4.5% right now, leading the S&P to a gain of 2.2%. The Dow higher by 2.1%, and the NASDAQ comp rising by 2.2%. I'm Doug Krisner. That's your Bloomberg Business Flash.
All right, much appreciated, Doug Krisner, with that Bloomberg Business News Flash. All right, well, Intel, looking to regain its footing in the chip industry, introduced new personal computer processors and graphics semiconductors, as well as software that makes it easier to use the company's technology. It is a must-read because of the topic and because it's reported out by our super smart Ian King. He's U.S. semiconductor and networking reporter at Bloomberg News. What did you say? How did you describe him in your intro?
With his decades of experience covering semiconductors all the way back in Asia, in Seoul.
Yeah, exactly. So knows it inside and out.
Yeah.
He is on the phone in our San Francisco bureau. Ian, I hope you're blushing because you should be, but you're so good at this. So tell us about your story that's out on the Bloomberg.
Well, as Scarlett likes to point out, I'm old enough to remember things that happened a long time ago. And this conference that Intel sort of fired up again yesterday used to be a regular fixture. It used to be one of the biggest events in the tech industry from the 90s up until the sort of 2017 when it kind of went away. And it was Intel would turn up and say, hey, look, computer industry, this is what's going to happen. Fall in line. And obviously, the industry hasn't fallen in line for a few years, and Intel's relevance has again begun to slip. And this is Pat Gelsinger, the CEO's attempt to try to retake that kind of mind share and leadership role.
And I'm glad you bring up the 90s because the 90s were Intel's heyday, right? I mean, that's when it's the biggest maker of chips for personal computers. You can't think PCs without thinking Intel.
That's a good point.
And obviously that has changed. The way that we use devices and computers have changed as well. Now, Intel finds itself in the rare position, at least for someone like the CEO, chasing the leaders.
Yeah, I mean, the whole conversation at the conference was like, oh, hey, this is, remember us, we're Intel, right? Hey, we're here to help you. What do you want? It was a very different tone than we've seen from in the past when they would say, look, this is the way that this technology is going to develop. You need to follow us. And, the new tone that they have is reflective of the position they're in. I mean, they're still 68.6% market share, which is not bad. But when you've been, as high as 80% market share in recent history, that represents a decline. Yeah. They've gone, they're still one of the biggest companies in the chip industry, but revenue is going to be down 16% this year when the rest of the industry is likely growing.
Hey, Ian, when you look at Intel and its kind of laundry list of challenges here, what is top of mind here, and what is it that they must figure out?
Yeah, they need a win. They need to prove to the industry that, hey, we've got something that you absolutely can't live without and you have to pay us for, which has been the case pretty much throughout their history. So they need to sort out their manufacturing technology, which they say they're going to do, and they need to have products arrive on when they said they're going to arrive and perform in the way that they said they're going to perform, which hasn't happened for a while.
Hey, you know, Ian, earlier this week, Tim and I had on the mayor of Columbus, Ohio, and Intel is investing big in his city in terms of building out facilities there. How important is all of that build out domestically to the Intel story in your view?
Well, this is what, you know, Pat Gelsinger was talking about and what Intel executives are talking about at this conference is like, look, we are building a future for the industry. We are trying to get into a new business. We're going to make chips for other companies and their designs. This is who we are. This is what the world needs. And, you know, there's some logic to that, and it's certainly true that there's a need. The question is whether it'll be Intel that is able to deliver that technology and become this central hub for the industry. And frankly, investors don't believe that's going to happen anytime soon, if at all, right now, when you look at where its shares are and you look at the sentiment on the stock.
Which is why you had activist investors like Dan Loeb of Third Point come in and try to exert some influence and push Intel to do more to improve its position and increase its share price. What does a Dan Loeb and the activist investors who are looking at Intel think of this new strategy?
Well, and that's, I think, the crux of the matter, and this is the kind of difficulty that Pat Gelsinger, the CEO, is facing. His plan calls for, you know, unprecedented levels of spending and expansion, which won't pay off overnight. You know, it'll be 3-5 years. As you know, chip factories aren't cheap, right? And they take a few years to come online, and you have to make a lot of money quickly out of them to make them worthwhile. Investors are saying, look, you've gone from being this 62% gross margin company to now you can't even hit 50, right? Your cash is going away. You know, batten down the hatches, make yourself a smaller, leaner company, whereas you have a CEO who's promised the board that he's going to make Intel great again, and by great he means big.
But is that the conundrum? I mean, or it is the conundrum, right? That he's got to spend maybe to kind of innovate, do what Intel or go where Intel needs to be, but at the same time, the activist investors don't maybe necessarily love that spending. You just got about 30 seconds left, Ian.
Yeah, and what's worse is he's doing that at the end of one of the chip cycle's better periods where everybody now says, wow, things are going to get worse. Things, you know, the fundamental demand for chips isn't going to be there to help, you know, get him through this difficult patch. So it's a difficult situation to be in, but he's absolutely determined.
Yeah, and the cost of borrowing money has just gone up and continues to go up as well.
Yeah, which doesn't make it easy. Ian King, thank you so much. Always appreciate. Ian King, U.S. semiconductor and networking reporter at Bloomberg News, joining us on the phone in our San Francisco bureau. And, you know, Scarlett, just looking at Intel shares, they're down roughly 47% so far this year. SOX is also under pressure, but it's not down as much. It's down about 38% this year.
Trailing its peers, and that's been a familiar story for investors, including Dan Loeb.
All right, right now, back to World and National News, back to our newsroom in the nation's capital, our 99.1 newsroom, and Nancy Lyons. Hey, Nance.
Thanks, Carol. Hurricane Ian has made landfall over the southwest coast of Florida. It is packing winds of 155 miles an hour, and Governor Ron DeSantis says it is expected to be one of the strongest storms to ever hit the U.S. mainland.
This is a really, really significant storm. It will be one of the storms people always remember when they think about Southwest Florida, probably be the big one.
Governor DeSantis says emergency personnel are ready to help those in need, and he's telling those who evacuated the area not to rush back. He says once Hurricane Ian leaves the area, the roads will be crowded with utility workers and rescue teams. President Biden is warning oil and gas companies not to price gouge as Hurricane Ian bears down on Florida. European Union officials are pushing for biting sanctions on Russia and President Vladimir Putin over recent signs of escalations in the war in Ukraine. Bloomberg Maria Tadeo says the EU feels Putin needs to pay.
the fact that he has made nuclear threats over the past week, and of course, the fact that the referendums, which they call a fake, a phony, a scandal in those occupied territories in the east of Ukraine, did go forward. At this point, the European Union says the response is to increase the pressure on the Kremlin.
Bloomberg's Maria Tadeo says the EU is moving to put a price cap on Russian oil sold to third world countries and banning more imports of Russian goods. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts.
Thank you so much. Nancy Lyons in our 99.1 newsroom in Washington, D.C. You are listening to Bloomberg Business Week on Bloomberg Radio, watching us on YouTube. Carol Massar along with Scarlett Fu in for Tim Stenovic on this Wednesday. And how do you feel about pay transparency?
I think it's a good thing.
I think so too.
I think it's great, especially for young people who enter a new organization and know they want to move up but have no idea where they stand and what they should be asking for, and there's no one to ask.
Yeah, exactly, right? You do some Googling and you hope you can find out. I'm always amazed at when somebody talks about a salary, and they're like, do you believe how much somebody works or makes? And I feel like it's based on really not smart information, and now it's going to get smarter.
Right, because you have a bunch of states. Colorado led the way. You also have cities like New York City and Washington State and now California that are really joining this salary transparency movement, making sure that companies, when they list job openings, include a salary or salary ranges so that people have more of an understanding of what they're applying for and what they should be asking for, and don't end up committing to a job at 10% below the average salary.
So now, because of California, right? So we're talking about Alphabet, Meta Platforms, Walt Disney, Wells Fargo. I mean, all of these are big, well-known companies are going to have to put their stuff out there.
Yeah, but there's different ways of fudging it. And you know that companies will try to find ways to do that. I know, right?
No, go ahead, sorry.
In places like Colorado, they have gotten around the rules by not making clear where the job is based. So if it's based outside of Colorado, then they don't feel the need to actually put the pay range in there.
Which is interesting coming off the pandemic, right? Because everybody can, or potentially.
Yeah, it works out for them if they're using that argument. It certainly violates the spirit of the law.
And the whole idea of this, I'm just looking at some of our reporting by the amazing Jeff Green of Bloomberg News. Regulators latching onto salary transparency is a way to chip away at the stubborn gender and racial wage gaps that are out there, where we often see a man or woman or people of different backgrounds being paid differently for the same job.
Yes, absolutely. This is something that is meant to at least close that gap a little bit, if not get rid of it completely. And what I found really interesting is that Indeed, the job search portal, said that 75% of new postings to its site now include salary expectations.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
A few minutes away from the closing bell, the equity market is at session highs right now, with the S&P up about 2.4%. This rally was triggered when the Bank of England moved to bring order to sovereign debt markets earlier in the day. The BOE is now going to buy long-dated UK government bonds in whatever quantities are necessary to create a bit of stability in markets. You'll remember the volatility that the British government created when it announced plans to aggressively cut taxes. Today, if you look at the yield on the 10-year British gilt, down 50 basis points to 3.99%. We also have a rally in crude oil, which is helping to lead the S&P 500 higher. The S&P 500 Energy Group is up more than 3% now, tracking a gain in crude oil. In the electronic session here, WTI up more than 4.5%, just above $82. We also have a rally in shares of Biogen. The company and its partner, Eisai, reporting their new Alzheimer's drug significantly slowed the disease. The results are coming from a large-scale clinical trial. Shares in Biogen right now up nearly 40%. With that move lower in rates, we've got a weaker dollar right now, with the Bloomberg Dollar Spot Index down about 1%. I'm Doug Krisner, and that is your Bloomberg Business Flash.
All right, Doug Krisner, thank you so much. It is 3:49 on Wall Street.
The following is an editorial from Bloomberg Opinion.
This editorial was written by the Bloomberg editorial board. Amid the stir caused by President Biden's plan to cancel student loan debts, too little attention has been paid to another far-reaching reform, the administration's change to a lending program known as income-driven repayment. If widely applied, Biden's proposal would incentivize students to take out bigger loans and increase overall student loan debt. Worse, it would only encourage colleges to continue raising tuition. It would be better for the government to expand targeted aid through federal Pell Grants, which would limit the amount that poor students have to borrow in the first place. Reducing the cost of higher education, particularly for low-income students, is a goal worth pursuing, but this plan is the wrong way to go about it. This editorial was written by the Bloomberg editorial board. For more Bloomberg Opinion, please go to Bloomberg.com/opinion or OPIN Go on the Bloomberg terminal.
This has been Bloomberg Opinion.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, everybody, just about 10 minutes left in today's trading session. And, man, we are seeing some buying here in the last few minutes of trading. As Doug mentioned, those equity averages well above 2%, 2.3% higher on the S&P. NASDAQ higher by almost 2.5%. We are pretty much at our best levels of the session. This is we've seen yields back off. So let's get to it. Let's get to the Drive to the Close with Doug Sioka, CEO and partner at Kavar Capital Partners, over $1 billion in assets under management. He joins us on the phone in Leawood, Kansas, and joins us on the phone from there. How are you, Doug?
I'm doing very well. How are you doing?
I'm doing okay. But I got to ask you, something really important happened here in New York City. I don't know if everybody saw it, but our New York City Mayor, Eric Adams, actually making some comments about New York versus Kansas. Here's what he had to say.
New York has a brand, and when people see it, it means something. You know, when we go there, it's not, Kansas doesn't have a brand. You know, when you go there, okay, you're from Kansas.
Ouch. New York City Mayor Eric Adams having some fun about branding. But come on, Doug, you know, you are from Kansas. One of the reasons I love talking to people around the country, especially when it comes to markets and the economy, is we get a different perspective. So come on in.
Yeah, we were shocked to learn that we were the land of no brand last night.
Sorry.
Imagine, it made its way around our local media circuit, and so it's actually kind of kicked up a lot of sort of spontaneous contributions to define the brand of Kansas. And I don't know if you want to invoke the national basketball champion Kansas Jayhawks from this year, our agricultural contribution to the world, great schools, low crime, and lest us never forget the birthplace of American treasure, Ted Lasso.
Oh my gosh.
Oh,
You're
that's
right.
a good point.
You know,
I not thought of that.
You make a good point. A really good point. I got to say, I love the heartland. And like I said, I love talking to people, especially when it comes to financial markets, and trying to get a grasp of what's going on in terms of sentiment across the country. And when we go to you, Doug, we get that. Tell us, how does it feel in Kansas right now? Are you guys as freaked out as much as we all are about recession, Fed moves, higher rates, what's going on overseas? Give us some perspective here.
Yeah, I think all of that. I mean, as we know, I mean, being in the Midwest is wonderful, and we love sort of the set of values and the Midwestern mentality and friendliness. But, you know, the market is global, and we feel as plugged in here as I think I probably would if I was sitting in Chicago, New York, or London. So I think the way information makes its way around the universe these days, we certainly don't feel disconnected. And the psyche of certainly our clients is fragile. You know, I think just the cross-asset class correlation that has defined the first 9 months of this year has been really pronounced. And, you know, I think that unfortunately when you have to go through some expectation resetting, when you get these resets and valuations, and you just try to frame perspective on what that could mean well into the future. And we're very optimistic. And I think, unfortunately, when you have to plow through this, it sounds silly to be optimistic in the face of prospective recession and a bear market, but we can't help but be.
So you have to plow through this, and I wonder, there's this word disorder that comes up a lot these days. Janet Yellen says there's no disorder in the markets, at least stateside. Larry Summers says, yes, there was in the UK bond market, but he sees risks of breakdowns to come. How do investors prepare for that possibility of breakdowns to come? Do you just sit in cash? Do you move to cash? Do you sit tight and not do anything?
Looking at my 401k, I kind of wish I'd moved to cash. I'm just going to put that out there.
Yeah, I think we could have used an expression for a while and just talking about managing for the short term and investing for the long term. And keeping a certain amount of capital out of the path of insanity, I think, is just prudent asset management. But I think more than anything, and you know, the Fed seems to think that their experimentation is not live, right? This is not like a randomized controlled trial where only one group of constituents is impacted by their actions, right? There are direct implications and many indirect implications where, right, no area of a globally intertwined economy is going to be immune from some of the things they're doing. And I heard an interview with Liz Ann Saunders the other day, and she made a really good point about the Fed trying to differentiate between financial market volatility and financial system instability. And I do think the Fed seems at best apathetic to the former, but hopefully, you know, not to the latter. And
Right.
what's taking place in the UK is a pretty good example of the latter.
Yeah, financial market movement volatility is certainly what we're seeing right now. If you were to take a step back, what is the tail? What is the dog here? What's driving what here?
Yeah, it's a great question. You know, I think what's interesting when you do take the step back, right, is if you are kind of understanding accountability, which for the exercise is beneficial so you can ascertain a pathway forward. And then you understand the accountability of why we have inflation. We had a lot on the demand side because coming out of the pandemic, we had a bunch of stimulus that justifiably came into the economy domestically and globally and likely overstayed the necessary point of it being retained. And then you have some of the externalities, right, that have taken place because of supply line disruptions in Russia, Ukraine, and over in China. And I think what you try to do is then find the combination of steps with extraction of liquidity, being mindful of the things that are out of your control, and then use a term that Powell used in his press conference 4 times but is not actually incorporated into practice. Understand that the implementation is going to be long and variable. And that would require a set of patience to understand the direct impact of some of these monetary policy initiatives. If you had that opportunity, I think you take a little volatility out of the system, but you restore much more needed stability to the system.
Hey, Doug, what's a smart metric to keep an eye on for investors where I feel like the metrics, there's a lot of volatility in them, and I'm not quite sure what we should be focusing on at this point?
You know what's been fascinating, Carol? This week, despite the hawkish tone of the Fed meeting, follow through at that Fed listens event on Friday, and then reinforce through harsh language of Mester, Kashkari, and Bullard, the terminal rate projection has dropped every day this week, and now sits at 4.4 for March of next year. So either the market thinks the Fed will see the fruits of its labor come through in better CPI, PCE, or job reads, or the realization of these global ramifications, courtesy of what took place in the UK, and that may cause the Fed to pause, right? Maybe a little bit ahead of its SEP projections.
Right.
I think that would be a really good thing for them to deliberate about doing.
That's interesting, which also, I keep thinking about what Charlie Evans told CNBC in terms of maybe Fed rate moves potentially topping out come March 2023. Doug Sioka, we love you. We love Kansas. Chief Executive Officer, partner at Kavar Capital Partners, joining us on the phone from Leawood, Kansas. He's got about $1 billion more than that under management at his firm. All right, folks, just a couple minutes left in today's trading session. We're just coming over our highs of the session when it comes to the equity markets. Time to head over to our TV colleagues for our cross-platform coverage. We call it Beyond the Bell. We're counting you down at the close.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we're about 2 minutes away from the end of the trading day. Romaine Bostic, Caroline Hyde, Taylor Riggs counting you down to the closing bell. Here to help take us beyond the bell. It's our global simulcast. We're joined right now by Carol Massar, and a hearty welcome to Scarlett Fu, filling in for Tim Stenovic today. And we welcome our audiences across Bloomberg Television, Bloomberg Radio, and on YouTube. Taking a look at this market, Carol, coming off 6 straight days of declines. We have a pretty strong day here, up more than 2%. Only 11 stocks in the S&P 500 in the red.
It's pretty remarkable, right? But, you know, depending on the day this week, it looked like things were all coming undone or things were starting to look up like they are today. So a lot of volatility, no doubt about it. It does make me wonder about something Doug Sioka of Kavar Capital Partners just on with Scarlett and me. And he said this week, despite the hawkish Fed meeting and all the rhetoric that we're hearing from Fed officials on hawkish moves to continue, the terminal rate projection has dropped every day this week, which he thinks is very, very telling, Scarlett.
It could be very telling.
Telling
There's
in a
also
good way or bad
so
way?
many people
Well,
wondering.
that maybe we're done. Maybe like things are starting in terms
It's
of
a big question mark at the end of the day. No one can even determine whether there's actual disorder in the markets. Janet Yellen says there isn't. Larry Summers says there was in the UK bond market. He says he sees risks of breakdowns to come. If that's the case, people are kind of putting that on hold for today at least.
There's a lack of disorder? Is that what you said?
Is there disorder in the markets? It's a really simple question that no one can answer.
I'm going to answer it, yes. I mean,
Well-
you don't get a 25 basis point move on a 10-year yield after going up 10, 15 basis points. That's not orderly.
I really love the UK market this morning when they jump 100 basis points on the long bond in the last 2 days and then plunge 100 basis points on the day. But Scarlett, your point is taken, and that the confusion and the cross-asset signals that are out there remain. It really is this bond volatility and the whipsaw within these markets.
I like Scarlett. I think I can. You think I can trade punches with her?
Bones to
yeah,
pick?
Yeah,
She can hold her own.
I'm tired of beating up on Carol. All right, here we go, guys. We get the closing bells here. This is actually a pretty phenomenal day, no matter how you cut it, whether you think this rally has legs or not. Still pretty impressive. 15 stocks in the S&P 500 finished lower, 488 higher. You put it all together, you got an S&P 500 higher by 1 point, basically 2%. We're going to round it up here on the day. The Dow Jones Industrial Average up by more than 500 points at 1.9%. The NASDAQ Composite higher by more than 200 points or 2%, and the outperformer on the day, that belongs to the Russell 2000, higher by 3.2%.
I'm just happy because Romaine might be moving on from picking on me. What? No, but we are seeing some conviction, certainly when it comes to volume behind the moves in the Dow and the S&P in particular today. Look at the S&P. Let's dig a little bit deeper. Most names, we'll hear more about that in just a moment. 488 to be exact. Higher today, 15 lower, none unchanged.
Can I just real quickly?
Yeah.
We haven't had a day like this in terms of the percentage of gainers out there. Going back, I think, to 2018, and I'll double check this. That was December 26, 2018. That was when every stock but one in the S&P 500 rallied.
That's a long time.
Yeah.
That's a long time.
I will let you beyond the S&P 500. You look at the number of advancers versus decliners on the New York Stock Exchange. 11 stocks higher for every one that is down on the NYSE. That only brings us back to July 19th in terms of a broad-based advance. So the smaller caps maybe not seeing it, even as the Russell 2000 gains more than 3%.
Take a look at where we are on a sector level as well. This is somewhere that we can really look at the depth and the breadth of this market. Carol, I do this for you. It is all green on the screen except for one at the bottom. Let's start there, if we will. It's technology, hardware, and equipment. You're only off about 0.7%. Even the, quote, worst performers are actually still in the green. It's a lot of utilities and household products typically get a boost when yields fall, so the math, of course, there makes sense. Come and climb up to the top here, some of the, quote, best performers. Every sector is up more than 2%. The big outperformers, energy, media, and entertainment as well, along with some of those consumer durables and those retailers, all up about 3.5%.
Look at all that green. Gave me so much to choose from when it comes to some of my gainers today, but I had to go to Biogen. We've been talking about it all day here. This stock pretty much closing just off its highs of the day, still with about a 40% gain. We know the news, top of the S&P 500, top of the NASDAQ 100, gaining about, I think, $10 billion in market value alone today. And it has to do with its experimental medicine in partnership with Asahi. That's a Japanese pharmaceutical company, showing that it significantly slowed Alzheimer's in a phase 3 trial. It really just lifted the overall group, I should say.
And I'm really into it. I mean, this is a big deal, of course.
It's huge.
All the debate about sort of the amyloid, whatever you call it. And of course, what was it, Pfizer and the big debacle that we had with the approval where everyone...
Well, this has been a tough nut to crack in the medical space, in the healthcare space, Alzheimer's, as you know. And so to see some optimism in a big way, especially in phase 3, that's significant.
Right, and the CEO of Asahi, the Japanese company, basically said that this actually proves that the theory actually works. Now, whether the data will back that up remains to be seen, but he's optimistic.
All right, so we're all in, investors all in on Biogen. I also want to mention Netflix. This one up more than 9%. Speak about all in. It feels like all of a sudden the Wall Street community is all in on Netflix. Also top in the S&P 500 and NASDAQ 100. Atlantic Equities, latest to turn bullish on the outlook in its new ad-supported tier, so they upgraded it to overweight and lifted the price target to 283. Stock closed at 245 and change. And I did want to mention DocuSign. This one also an outperformer, up more than 5%. It is about its restructuring plan. The board at DocuSign saying, okay, go ahead. It's going to cut current workforce by about 9%, some charges of 30 to 40 million, with most of that happening in the third and fourth quarter. And then Scarlett, it expects that restructuring to be substantially completed by the end of 2023. So this one, again, a big outperformance there.
Okay, so looking for underperformers was kind of hard today, but I did find Apple. It's unavoidable. It's at a 2-month low. Global Equities Research calls Apple's plan to ditch iPhone production. That was a Bloomberg exclusive. It calls the company the first casualty of recession and says the collapsed demand is just the tip of the iceberg, and says maybe 500,000 layoffs in the Apple supply chain over the next couple of months, which would be huge if it comes to pass.
Who said that?
This was Global Equities Research. Yeah, I hadn't heard of them either, but I was intrigued by the 500,000 layoffs.
I'm intrigued by that too, because it seems like a lot of people are trying to dismiss this as just as a nothing burger. I guess they feel like Bloomberg is just, overplaying this, but the reporting looks solid to me.
There's a lot of jobs at stake. Yeah. Also looking at VF Corp, which owns brands from Vans and North Face to Supreme and Timberland, basically teenage boys, my son, cutting its full year outlook, and Romaine, now sees revenue up 5 to 6% versus 7%. What was interesting, of course, in addition to blaming things on the macro uncertainty, is excess inventories, which means probably discounted goods later on this year.
A new pair of Timbs for Christmas.
There you go.
Does he wear Wranglers, Romaine?
I know, right?
I haven't seen Romaine in anything but a suit, so I couldn't answer that.
I've seen him in Crocs
too much of a
before.
snob for
He's got a pair of Crocs, if you ask nicely.
God, did you go blind after that?
What color are your Crocs, Romaine? And just a quick mention of SQQQ. This is the 3 times inverse leverage ETF on the Qs. Whatever the Qs do, you take the inverse of that times 3. No one wanted to be short the NASDAQ 100 today, and you can see that this ETF had a big decline. It was the 3rd most actively traded ETF in U.S. markets.
A lot of outflows, right? We were talking about that earlier.
Yes, Emily Graffea was telling us there were already outflows the last 2 days, so there was a little bit of expectation that we'd get a turnaround Tuesday. That didn't happen, so we got Whiplash Wednesday instead.
Whiplash Wednesday is a great way of putting it, because if we look across the cross-asset perspective, this would have been a very different color if you come into us this morning, because we had, at that point, a strong US dollar. You had most of your commodities falling, and now it is a sea of green. We look at commodities with WTI up more than 4%. This is more of an inventory story at the moment, worrying about Russia supply, global supply, inventories. WTI pushes up more than 4%. We've, of course, got natural gas pushing up high, even though we think demand will be crimped by that all-important impact of that Cat 4 hurricane over in Florida, but natural gas pushes up 3%. We see, of course, massive moves in Europe once again as we worry about the Nord Stream 2 implications. But this is really where some of the currency focus has been. This has been an extraordinary volatile kind of day. Bloomberg Dollar Index now weakening by a percentage point. That, after the Bank of England comes and rides into the rescue, trying to diminish some of that extreme volatility and indeed the extreme implications of a bond yield that had crushed so much higher on the long end that was going to have implications for the pension funds and long-term investors. We therefore have dramatic moves higher in the euro strengthening by 1.4%, the British pound strengthening, that every currency really versus US dollar went higher. And then look at these extraordinary moves that happened. 100 basis point move on the 30-year in terms of your UK gilt. I mean, leaves us breathless, Taylor.
Hugely breathless, and it really has been the story of the day, Caroline, as you mentioned, starting overnight in your UK, and sort of the ramifications and the contagion that filter into the big story of the day today, and that is the huge plunge within the U.S. full faith and credit as well. Remains 16 basis points down on a 2-year yield, but you're still at a 412.
Yeah.
The 5s and the 10s are where you're getting the stickiness, 24 basis points down and below that 4% level, but you actually had a 7-year bond auction today that was very well received, despite the weakness in the 2s and the 5s yesterday.
Right, but then, but then this is the other thing too. When you look at that repo facility that we had a little bit earlier, the reverse repo, excuse me, and you sort of realize, okay, people are still piling into cash here, or staying in cash, if you will, here. So there's a big question here when you talk about the conviction in this rally and whether it has legs, the idea that there are a lot of people, as of today, that are still allocating heavily to cash.
Big question is, so what happens tomorrow? Does this rally hold? Does it come undone? What kind of volatility do we see?
Scarlett, answer that. Yes.
If I knew the answer to that, I wouldn't be here.
Well, I mean, I think one thing we can all agree with is that the volatility that we've been seeing across the board, cross asset-wise, I don't think is normal, and I think that's going to keep a lot of people afraid, at least on the sidelines, until that volatility tamps down.
Yeah, we'll see what the economic numbers play out too, and see if that impacts the trade. All right, guys, that's a wrap for this Wednesday trade. Quite a rally on Wall Street.
Hi, Scarlett.
Good to be back, guys. We'll bring her back again. Our cross-platform coverage, radio, TV, YouTube, we call it Beyond the Bell. We will see you again, same time, same place tomorrow.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, everybody, Bloomberg Business Week. Carol Masters, Scarlett Fu, wrapping up the markets with our TV colleagues. You've covered markets for years. I mean, we've seen up and down, we've seen different cycles. What do you think?
I was waiting for a turnaround on Monday. I thought it was going to happen, and it did look like we were going to come off our lows, but that didn't come to pass, and then yesterday was ugly. And then today, finally, with this intervention from the UK, which I still don't understand how it's going to work, that they have now instituted emergency QE, even though there's going to be QT.
It just feels messy. And that we don't quite know the impact at this point. All right, folks, that is a market wrap. But right now, we want to get a wrap up when it comes to world and national news. For that, it's Nancy Lyons in D.C. Hey, Nance.
Thanks, Carol. President Biden says he is keeping tabs on Hurricane Ian as it crashes ashore on Florida's Gulf Coast with winds of 150 miles an hour. He says he's spoken with Florida Governor Ron DeSantis and promised to help.
The president also addressed reports of price increases on gasoline, noting that the hurricane might impact less than 2% of U.S. oil production.
This small temporary storm impact on oil production provides no excuse for price increases at the pump. None. I will ask officials to look into whether price gouging is going on. America is watching. The industry should do the right thing.
The hurricane's winds are reaching 155 miles an hour, and some areas of Florida are forecast to get 2 feet of rain. In Washington, Irv Chapman, Bloomberg Radio.
Russian President Vladimir Putin is about to feel the sting of more sanctions following his move to annex Ukrainian territory through widely condemned referendums. European Commission President Ursula von der Leyen.
Russia has escalated the invasion of Ukraine to a new level. The sham referenda, organized in the territories that Russia occupied, are an illegal attempt to grab land and to change international borders by force.
Von der Leyen says the EU will impose a sweeping new import ban on Russian products. There had been reports U.S. Treasury Secretary Janet Yellen was preparing to leave the Biden administration, but those familiar with her plans tell Bloomberg Yellen is prepared to stay in the cabinet well beyond the midterms. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts.
All right, Nance, thank you so much. Nancy Lyons in D.C. Carol Masser, along with Scarlett Fu here in our Interactive Broker studio, streaming on YouTube. So we talked about Amazon earlier, and we had a few more stories we wanted to get to. And this stock, by the way, definitely a rally in today's session, up more than 3%. But where should we start? Where do you want to start?
Let's go with the fact that Amazon is cutting costs, or watching costs at the very least. It's encouraging its customer service employees at some U.S. call centers to work from home because that would help save money on real estate. And this is according to reporting by Spencer Soper, who spoke with people familiar with the matter. This is part of a plan to close multiple call centers around the country. I find it intriguing because
I think this is huge.
For so long, Amazon was all about reinvesting into its business. And profit margins be damned, net profit be damned. It was all about revenue and reinvesting.
I think what's interesting too is, and I feel like the last few years, I don't know whether there's greater transparency or just things work. I feel like things work through the market a little bit more quickly, especially when it comes to corporate news. If they're seeing pressure or concerns about the outlook, they're very quick to cut costs, very quick to stop hiring or cut hiring. And I feel like at some point, does somebody say, you know, we have all this real estate, this pricey real estate. And again, this is according to people familiar, but do they say, here's a way to cut costs, just let people work at home?
I guess another way to think about it is Amazon has a lot of real estate because of data centers and because of the warehouses.
And they have to, right?
And they have to. So they're going to cut cost some real estate where they can.
Right.
Even though real estate is probably going to be more of a bargain moving forward than it is now.
I agree. I feel like I keep waiting for that shoe to drop. It hasn't happened, and it's just my gut, which is nothing scientific, but certainly something.
I'll go with your
watch.
gut.
Well, thank you. Another story in Amazon, their annual device event today showed that the e-commerce giant pushing further into wellness security in the auto industry, underscoring the effort to weave its technology into every part of consumers' lives. It's like the
Do you have an Alexa?
No, but I do have a Google Home.
Okay, so I don't have an Alexa, and this feels like it's just, let's integrate Alexa even more into your life.
But I will say, we go to buy something, and it's like, well, let's go to Amazon. Like, that is almost our default at this point.
Yeah.
And I agree that they keep trying to move broader into our world. All right, you are listening and watching Bloomberg Business Week on Bloomberg Radio.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
We had a rally in the equity market today. The S&P 500 roared back from a 6-day slide. This was triggered when the Bank of England staged a market intervention as a way of boosting UK bonds and kind of restoring a little bit of order to its sovereign debt market. The BOE now will buy long-dated bonds in whatever quantities are necessary. This to restore a little bit of calm after the chaos created when the government announced those plans to cut taxes aggressively. We had the yield on the 10-year UK gilt dropping 50 basis points today to 3.99. U.S. rates across the Treasury curve lower, with a 10-year down 22 basis points to 3.72 and a 2-year off more than 17 basis points to 4.10. The S&P 500 finishing very near session highs today with a gain of around 2%. The S&P Energy Group gained more than 4% today as it tracked the price of crude oil higher. WTI in New York picking up nearly 4.5% now in the electronic session. We're trading around 81.95. One of the standout performers, though, Biogen. Shares rallied 40% after the company and its partner Eisai reported their Alzheimer's drug significantly slowed the disease. With that drop in rates today, quite a bit of dollar weakness. We had the Bloomberg Dollar Spot Index falling 1%. I'm Doug Krisner. That is your Bloomberg Business Flash.
All right, Doug, thank you so much. Well, our last hour, we're going to talk about a lot of things. Climate, we're going to talk about Janet Yellen. We're going to talk about Janet Yellen and climate change. We've got a lot to get into. We also want to talk about Janet Yellen and how long she's going to stay in the White House, because we just saw a story across the Bloomberg, and she is eager to see through crucial projects, has told White House officials she is prepared to remain Treasury Secretary well after the midterm elections, is according to people familiar with the discussion. So lots to get into with our Bloomberg News senior editor, Chris Ansey, who has written about Janet Yellen and how that is, she's concerned and worried about climate change. So a lot to get into. He joins us on the phone in Boston. Chris, nice to have you here with Scarlett and myself. How are you?
Good, thanks.
Can we start with Janet Yellen and staying in her role at the White House? So what do we know? What are you hearing?
Well, you know, there's been a lot of speculation for some months that Treasury Secretary Yellen, might not, go the full 4-year distance in the Biden administration, and that perhaps, after the midterm election, that would be a time when she might move on. So what Chris Condon, Saleha Mosin, and others at Bloomberg are reporting here is that people familiar with the discussions say that Yellen has told the White House, "No, I want to be on deck. I want to be in office. I want to continue to serve at the Treasury after the midterm election." She's got, major unfinished business at hand. One is an historic global corporate minimum tax agreement that she got last year that still needs to be implemented. And then there's this Russian oil price cap that she has championed as a way of maintaining global oil supplies while at the same time curbing revenue that accrues to Moscow as Putin pursues the war in Ukraine. So she's got, a major agenda that she wants to pursue, and she's communicated that, if the president's happy, I'd like to stay on.
And of course, this is in response to a report by Axios that Janet Yellen and also the White House National Economic Council Director Brian Deese were probably going to leave, or at least were talking about leaving. I know that and no one outside the world of journalism keeps track of these kinds of things, but within journalism, it's a big deal. I want to ask you, Chris, about Janet Yellen and some of the projects that she takes on, because as Fed chief, she was notable for always thinking about and framing economic policy through the mind or through the lens of Main Street. And in a similar way, she's also thinking about climate change and is very concerned about it. Tell us more about what Janet Yellen is thinking and doing about it.
Yes, so she was on a trip to North Carolina yesterday where she went to this solar panel facility, and the main objective was to showcase the Biden administration's pro-clean energy, climate initiatives in a number of pieces of legislation that the president has signed into law over the past year or so. But I thought what was particularly interesting, as you say, she kind of frames things in big picture ways, was she described climate change as posing two distinct risks for the economy over the longer haul. One is to productivity and economic growth. So as regions warm, they become many of them will become less suited to economic activity. If you think about places along the seashore where there's a lot of tourism business, or you think about some agriculture areas that won't be able to be planted anymore. So that's a kind of a long-term running hit to productivity and growth. The other one is increased vulnerability to shocks. We're seeing this hurricane hit Florida right now. The extent to which there are going to be more and more of these powerful and destructive storms that hit, that's going to have all kinds of ripple effects. It's going to mean all kinds of disruptions to supply chains, something that we've unfortunately had to deal with a lot the past couple of years. It's going to be, a strain not only on fiscal policy, where state and local governments are going to need to allocate more money to repair and prevention and all of that kind of thing, but households as well, like flood insurance.
Right. I mean, a material impact, if you think, on companies as well as individuals, but she also, the flip side, positive about how we can, I think she said, also realize significant economic opportunities in high growth industries. And I guess I would say, Chris, that this is kind of one of those big macro stories right now. It's uncomfortable as we shift away from a carbon world or carbon-based world, and it seems like she's certainly front and center when she can see the opportunities as well as the cost.
And it's not just her either, right?
No.
Mark Carney of the Bank of England, when he was heading up the UK Central Bank, was also thinking very broadly about climate change and warning that it was a huge risk.
And continuing to do it now.
A financial stability risk.
Right, in the private sector.
Yep.
Chris Anstey, thank you so much, covering so much. Senior editor at Bloomberg News, joining us on the phone from Boston. Highly recommend you check out his story that is on the Bloomberg that covers more on Janet Yellen when it comes to climate change. This is Bloomberg.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Yes, indeed, everybody. Bloomberg Business Week. This last half hour, we've got a special guest. We just talked about Janet Yellen planning to stay on at the U.S. Treasury, at least for a little while longer, it seems like. But we also talked about her involvement in climate change, and we're going to get a bigger, broader picture. We're really going to really dig into, I should say, who Janet Yellen is.
And it comes down to how she was raised and what her father did and what she saw growing up and how that influenced her way of viewing economics and viewing what economic policy could do and should do.
It's all in a new book, Empathy Economics. We'll get to it in just a moment. But first up, got to go back to those markets and that rally today on Wall Street, Doug.
Boy, no doubt about it, Carol. The S&P roared back from a 6-day slide. A lot of appetite for risk assets today after the Bank of England staged a market intervention as a way of boosting UK bonds and trying to calm nerves in the UK sovereign debt market. It had ripple effects stateside with yields across the curve moving lower. Look at the 10-year down more than 21 basis points today to 373, and a 2-year off more than 17 basis points to 411. S&P 500 today finishing very near session highs. We were up about 2%. Energy leading the charge. The S&P Energy Group was above, or I should say higher by nearly 4.5% today, tracking a rally in the crude oil market. WTI above 82 the barrel today with a gain of 4.5%. We had the Dow up 1.9%, NASDAQ comp rising by more than 2% today. But the drop in yields weakened the dollar pretty substantially. The Bloomberg Dollar Spot Index was down 1%. We've got a stronger yen now as we get set for trading in Tokyo, 144.15, and the euro rallied today against the greenback, a gain of about 1.5% to 97.36 U.S. cents. I'm Doug Krisner, and that's your Bloomberg Business Flash.
All right, Doug, thank you so much. Doug Krisner there with the Bloomberg Business News Flash. So we talked about U.S. Treasury Secretary Janet Yellen, concerns about climate change. That and Yellen's broader concerns about our economy are the subject of a new book. It's entitled Empathy Economics, Janet Yellen's Remarkable Rise to Power and Her Drive to Spread Prosperity to All. The author, Owen Allman, is executive editor of the International Economy magazine, and he joins Scarlett and me via Zoom in Bethesda, Maryland. Owen, so nice to have you here with us. How are you? And tell us about this book, because it is about Yellen's life, her career. It's also very informative when it comes to the U.S. financial system. What was your thinking and your mission when you set out to write this?
Right. Sometimes I wonder, what was I thinking writing this book? But, being at home during the pandemic was a perfect time to research it. First of all, Carol and Scarlett, thank you so much for having me on your show. I appreciate it.
Yeah.
So as a longtime reporter, over 40 years covering economics, politics for USA Today, for Associated Press, Business Week, I've gotten to know Janet Yellen over 30 years when she first came to Washington as the junior governor of the Federal Reserve. And I've really come to admire her because she is a very unique person on many levels. First off, it's unusual to come to someone across in Washington who is so nice and so unassuming and humble. You don't find that very often. She hasn't been, let's say, become arrogant because of her positions. The other thing, she is a real glass ceiling smasher. Think about it. The first woman to be chair of the Fed, the first woman to be Treasury Secretary after more than 230 years, and the first person of either gender to have those jobs, as well as being chair of the White House Council of Economic Advisors. So she certainly has a lot of history behind her. And so I thought she would be a fascinating person to write about. Basically, how did this woman wind up in such a historic number of positions? What is her philosophy, and what has made her kind of such a nice person, unaffected by her celebrity and power?
And so much of it goes back to her early childhood. She was raised in Bay Ridge, Brooklyn. She was the daughter of a doctor, and she saw the way her father treated patients, and that had a huge impact on how she thought about the role that policymakers play on society overall.
Correct. So that is true. So she was the first wave of baby boomers. She was born in 1946. And as a child, where she lived in relative affluence compared to a lot of her neighbors. And her father was his family doctor who had his office in the basement of their two-story row house. And she saw these patients come in to be treated, and a lot of them were still suffering the economic scars from the Depression. They were out of work, they were ill, they didn't have much money, and they had desperation on their faces. And he was a wonderful, caring doctor. He never worried about whether they could afford to pay or not. He would take whatever money they could afford to give him. And the other thing she saw, besides just how disadvantaged they were economically, was how important the job is to your self-esteem, your self-worth, and your feeling of wanting to, produce something important in your life. I think that was a really big lesson for her, which led to her sense of empathy about how do you make the economy create as many jobs and as much prosperity for everyone, not just, the well-to-do and those of us who may own, stocks and have and higher education. But how do you make it work for people who come into their life with far fewer advantages?
Hey,
that's kind of been her North Star.
She seems like, check. She just did one accomplishment after another, Owen. But I know early on in your book, I think you talk about some of her time at Harvard. I mean, she left Harvard, right? Maybe at that point, nobody would have said, okay, this is a woman who's going to be head of the Fed, U.S. Treasury Secretary, right? It was a different mode. And we just got about a minute, and then we'll come back and talk some more.
Sure. So basically, yes, in high school, girls were barred from going to the school for gifted boys, public school back then in the 60s. One of the rare people to study economics in college and at Yale. And yes, at Harvard, she was denied tenure. She left. She wasn't feeling, very confident about it. But her career then took off after that. She persevered despite all the barriers that women felt in the profession at the time.
All right, we're going to come back, continue the conversation. We're going to continue with Owen Allman, executive editor at the International Economy magazine. He has a new book out. It is entitled Empathy Economics, Janet Yellen's Remarkable Rise to Power and Her Drive to Spread Prosperity to All. And I think within his book, too, Scarlett, about someone saying that she just hasn't changed. And you feel like she's just so humble and so gracious. And
she's the same girl that she was in Bay Ridge and carries a lot of that into how she thinks about things. I remember when I saw her faint, or kind of, it wasn't faint, but she kind of swooned a little bit when she was talking one time.
Yeah.
And it was because it was right after Seder, and she had fasted. And people were really concerned about what happened, but it turned out to be an innocent thing.
We're so glad she was okay. Okay, we're going to get back to Owen in just a moment. In the meantime, let's get back to Nancy Lyons. She's in D.C. with a check and an update on world and national news. Hey, Nance.
Thanks, Carol. The Gulf Coast of Florida is seeing major flooding and high winds as Hurricane Ian moves ashore. It is now packing winds of 150 miles an hour. FEMA Administrator Deanne Criswell says many people are going to be impacted.
Hurricane Ian is and will continue to be a very dangerous and life-threatening storm. And this is going to be for the days ahead.
Deanne Criswell says hundreds of personnel are staged throughout the state. President Biden says he's keeping close tabs on the storm.
We are on the alert and in action. We've approved every request Florida has made for temporary assistance, emergency assistance, long-term assistance that I've received.
Biden also warned oil and gas companies not to use the hurricane as an excuse to raise gas prices and gouge the American people. Early numbers are in for more than 20 cities that launched basic income programs during the pandemic.
The average recipient of basic income was a single woman with kids. Most were people of color. They received up to $1,000 a month on average for about a year, just enough to get them above the federal poverty line, and they spent the bulk of their funds at superstores or small retailers. A quarter of the funds were spent on food. Less than 6% went to travel or leisure. Eventually, more than 30 cities will share their data on basic income on a dashboard set up by Stanford University, the Center for Guaranteed Income Research, and Mayors for a Guaranteed Income. In Washington, I'm Nathan Hager, Bloomberg Radio.
Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nance, thank you so much. Carol Master, along with Scarlett Fouchy's in for Tim Stanovic on this Wednesday, live on Bloomberg Radio, here in our Interactive Broker studio, streaming on YouTube. I got to say, one of my favorite things, whether it's the weekend or if I have a day off, like an afternoon nap, I love it. And this is a fun story by our Ariane Cohen. I think you saw this story about employees, what happens when they shift to a 4-day work week.
Yeah, so if you don't want to work 5 days a week and you want to work 4 days a week, what do you do with that extra day that you now have? You can pursue your hobbies, indulge your passions, or maybe you just catch up on sleep.
Yep.
It seems is what most people do when they have this free time.
Yeah, this is interesting. This is, I guess, a survey that was done. Workers who shifted to 32-hour work weeks logged 7.58 hours per night of sleep, nearly a full hour more than when they were keeping 40-hour work weeks. This is according to a lead researcher, Juliet Shore. She's a sociologist, economist at Boston College. She's tracking over 180 organizations globally as they shift to truncated schedules through 6-month pilot programs. In other words, these workers spent nearly 7 of their 8 reclaimed hours per week snoozing rather than knocking out errands or socializing with friends.
These are adult workers. These are not teenagers. What
are you saying?
You and I have teenagers, and we know that
every
every spare minute they get, they're sleeping.
I know. There's a couple times my daughter would sleep and be like, husband, let's go knock on the door, make sure everything's okay. She's really quiet. They surveyed about 304 workers, 16 companies, 3 U.S.-based, 1 in Australia, 12 headquartered in Iceland, tracking a set of global 6-month trials run by a nonprofit organization called 4-Day Week Global. And it comes as the pandemic has pushed employers across industries to rethink how, where, and when work gets done. I have to say, before I came to Bloomberg, I was working at a competitor, and I actually had a 4-day work week, and it was really kind of fun.
Really?
Yes, I had every Friday off. And what was really kind of nice is I felt like I had a day to do errands, a day to play, and a day to just veg,
And then
which
you
I
came
really
over
needed.
here and anchored morning shows, and you had no sleep.
I had absolutely no sleep.
You're on a sleep deficit for years.
Exactly. I'm still catching up. So it's kind of interesting, but, when in doubt, take a nap. That's all I'm going to say.
I'm all for that.
All right. You are listening to Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
A surprising development earlier in the day when the Bank of England staged a market intervention to boost UK bonds and bring some calm to the UK sovereign debt market. It created a rally in risk assets. Stock market finished near session highs today in the U.S. with the S&P up about 2%. Energy out in front of this advance with the S&P 500 Energy Group higher by nearly 4.5%. This mirrors a rally in crude oil today with WTI right now trading just under $82 a barrel with a gain of nearly 4.5%. The Dow is up 1.9% today, and in the NASDAQ market, the composite index up by 2%. So the Bank of England said today that it will buy long-dated UK government bonds in whatever quantities are necessary to kind of create a bit of calm in markets after the chaos we saw recently when the UK government announced plans to cut taxes. We had yields across the U.S. Treasury curve today tumbling. The 10-year last quoted down more than 21 basis points to 3.73%. On the short end of the curve, the 2-year at 4.12% with a loss in yield terms of more than 15 basis points. But that drop in yield weakened the dollar quite a bit. We had the Bloomberg Dollar Spot Index down 1% today. We also had another member of the Fed putting the markets on notice. The head of the Atlanta Fed, Raphael Bostic, saying inflation is still too high, and he is backing an increase in Fed funds by another 125 basis points between now and the end of the year. I'm Doug Krisner, and that is your Bloomberg Business Flash.
All right, Doug, thank you so much. You are listening and watching Bloomberg Business Week. Carol Master along with Scarlett Fu. Bloomberg Business Week brought to you by SEI with an operating platform designed to support all major asset classes, diverse strategies, and investment vehicles. SEI is redefining wealth management. Learn more at SEIC.com/tech. We do want to get back to our guest because still with us is Owen Allman. He's executive editor of the International Economy magazine. We are talking about his new book, Empathy Economics, Janet Yellen's remarkable rise to power and her drive to spread prosperity to all. Still with us via Zoom from Bethesda, Maryland. But as Owen, you reminded us, you were even part of the Bloomberg, the Business Week family at one point, but you've written about economics, business world for a long time, including covering Janet Yellen. So it's really fun to hear what you have to say about her trajectory, her path. And one of the things I wanted to ask you, what is it interesting and that really stands out about Janet Yellen as an economist, because not every economist is the same or what they focus on. What is so unique and interesting about her approach to economics?
Well, I think, first of all, she is kind of a mainstream economist. She has never embraced any, wild theories on either, the left or the right. But I think what makes her really unique is how she always seems to want to put people, the average person, front and center of, what is good economic policy. It's not, what's good for Wall Street. It's not what's good for, just corporations and imports or exports or the dollar. While she's very mindful of that, she's always thinking, what are good policies that maximize employment, help those at the bottom of the economic ladder get jobs and have improved incomes and lives? What makes them more productive? She's been giving speeches lately about what she calls modern supply side economics. You may have followed them. What's unique about it is the original supply side argument is we need to have more investment in plant and equipment, basically in capital, to expand supply, so that the economy can grow. She wants to use investment in people, invest in education, invest in training, arguing that, an educated and well-trained workforce is going to be happier, they're going to be more productive, they're going to earn more, and therefore they'll have more money to spend and to help expand the economy. And I think that is kind of a unique perspective.
Yeah.
I think another thing you mentioned earlier was climate change, if you want to talk about that at all.
No, but I think all of this feeds into that idea that she practices empathy economics, which again is the title of your book. Do you think Janet Yellen changed the Fed, the institution, or do you think the Fed changed her?
I think she had more of an impact on the Fed. Obviously, the Fed, being 109 years old, and has a long tradition on what its goals should be. But she did it. She had a few amazing impacts on the Fed. One was back as a junior member of the Fed under Alan Greenspan, the legendary chair. There was an argument back in the 1990s about should the Fed set a target of zero inflation as its goal. She argued it's better to set 2% inflation as a goal because to reach a zero, you would have to have such a strict, austere economy that it would be too painful for the workforce. She actually prevailed. She got all the other governors to agree. Even Greenspan agreed. And you may recall it was in 2012 that then Fed Chair Ben Bernanke actually announced 2% as the official target of the Fed for setting inflation. So that was pretty remarkable. The other thing she did at the Fed was she really stressed concerns about inequality, growing inequality in our society and the risk that poses to social and political stability, which in today's environment is pretty prescient.
No, it's one of our big macro themes, and I think she was she was way ahead of the curve. It certainly was something the pandemic revealed in a big way, and it continues. And we've got smarter in terms of not talking about income gaps, but wealth gaps, which is much more significant, and really stresses the injustices that are out there in society and why some people can't get ahead. One thing I wanted to ask you though, as we talk about inequalities, because I feel like it had to be hard for her at times being in such a male-dominated field and world, whether it's economics, whether it's the Fed, whether it's government. And I wondered, how she approached it, how she thought about it, because there must have been times that it was very difficult.
Yes, it was. And this is where I'll make a plug for her mother, who doesn't get enough credit. Her father.
We mothers never do. I'm just going to put it out there.
Her father gave her the empathy gene, and she talks about him. But her mother was a really remarkable person, considering back in the 40s where women weren't accustomed to having careers and were homemakers. She was a very bright, demanding but loving mother who insisted that the children do their best, that they have professional careers, that they be organized, that they dress well. They even went on cruises around the world to widen their perspective. And I think that gave Janet traits she needed to put her head down and really say, I'm going to compete with the best of men in a field that they dominate. I'm not going to complain. I'm not going to feel like an aggrieved victim. I'm just going to work real hard, focus, use my intelligence to get ahead. And she did. And she succeeded in almost every area that she pursued without feeling, I'm a victim of sex discrimination. But she is very mindful of all the women who are, and she has made a point of talking about the gender inequality gap. Women still make far less than men. And I think the Wall Street Journal recently had an amazing study that showed even when you control for where people went to college and fields they entered, women still made 10 to 15% less than men. And that bothers her a lot. And she really wants to use whatever power she has to try to correct that.
We're still doing the same jobs. We're doing it backwards in heels. It's just the same way and not making as much money.
Still getting paid less.
Yes, exactly. Owen, nice to get some time with you. Owen Allman, executive editor, International Economy magazine. Check out his new book, Empathy, Economics, Janet Yellen's Remarkable Rise to Power and Her Drive to Spread Prosperity to All. It's a major theme of our time.
I can't wait to read this book.
I know, I agree.
I'm looking forward to it.
And learning more. I'm looking forward to you joining us more in the future.
Yeah, I'm up for that.
You're a gem, and you're so amazing. Scarlet Fu there.
It's great to be reunited, Carol.
So good. Have a good evening, everybody.